Welcome to this lecture on storytelling in real estate. You may be asking yourself why have a lecture in storytelling in a course on real estate investing. We tend to associate investing with rational decision-making process where investors coldly ponder the risks versus the rewards in a heavy mathematical and analytical process, producing a metric that, if exceeding a predetermined hurdle, results in a binary decision to invest of yes or no. This statement can't be further from the truth. Humans are full of biases and are motivated not by precise calculation, but by the flow of emotions, such as fear, hopes, envy, greed, and hubris. Persuading a prospective investor to participate in a project requires putting together a credible story that tilts their minds in favor of action. A good story builds up excitement in the investor and touches upon the right emotions, such as trust, excitement, fear of missing out, and risk aversion. Storytelling is about effective communication that motivates people into action. I've seen too many investment brochures that are built merely to transfer information to the reader. They are focused on metrics, projections, analysis, and historical data. The problem with this approach is that, for one, it's tedious and boring, and second, it imposes on the reader the burden of synthesizing the mountain of information. As a potential investor, I want to hear about opportunity, strategy, about how obstacles were overcome, and how the deal was put together. The skills we employ in storytelling will inform how and what information we gather in a market research and how we present it to the outside world. Any good story is comprised of the following 6 elements: setting, characters, plot, conflict, theme, and narrative arc. Let's look at each in detail. The setting is the place and time where the deal takes place. It has to do not only with the location itself, such as the town, the neighborhood, or state, but also the circumstances surrounding the deal, which are just as important. Keep in mind that you don't buy real estate for its physical properties or attractiveness, but because of the prospective demand for that asset. Such a demand comprises, first and foremost, the desire of tenants to physically occupy the space. What will follow from that is the demand investors will have for the asset as an income stream. If the demand from the tenants is high, there will always be some investor willing to buy into that. When pursuing real estate investment and collecting market data, some examples upon which you can set your setting are growth, scarcity, gentrification, or transformation. All of these elements are compelling reasons to buy into real estate. Your setting may be about buying property into a recession based on a contrarian view of the market. Or maybe the market is booming and there is a mountain of liquidity flooding the market that you believe will cause property prices in your area to skyrocket. Even if you are acquiring core assets in a prime area of New York City, your investment thesis cannot be based on what is happening today, but what is your view about what will happen tomorrow and beyond. Your setting must comprise a macro view on the general state of the economy and inflation, and trends on consumption and investment, which are drivers of the economy. You should also have a view on the micro particulars of your location, demographics, the drivers of the local economy, and the supply and demand for the property you're offering, such as residential property, retail space, office buildings, etc. The characters are the people that make the story happen. Real estate is a people business, and every successful investment is the result of the right interaction of multiple players. In your investment memorandum, it is important to discuss the current state of conversations you've had with bankers, the seller, and his or her motivations for selling, other prospective investors, attorneys performing the legal due diligence, and the architects and engineers that will make the transformation happen. Perhaps most importantly, investors want to hear about you, the protagonist. They want to know about your background, your successes and failures, your experience in education, and how you managed to make this deal happen. The most important message to relay here is trust. Prospective investors need to know you will do everything in your power to protect their interests and that you are someone they can rely on. It is interesting to describe how the characters interact with one another. You could discuss how the deal syndication is put together, what profit distribution agreements the sponsor will have with the investors, such as preferred equity structures, waterfall agreements, profit splits, and so on. The plot is the sequence of events that connect the audience to the main character and the goal. Having a clear goal is key. In a movie, it will be how the heroes are planning to recruit a team to defeat the bad guys. Your investment plot is a sequence of steps you plan to take to execute the deal. It describes how the major events will play out. These could be securing the asset, the acquisition, financing, capital expenditures, renegotiation of the leases, and eventually the sale of the property, at which point the goal of the project will be fulfilled. These milestones could be illustrated by a Gantt chart, showing your estimation of the timing and the sequence of the steps of the project. The conflict is the tension that drives the story forward. In movies, it describes all the challenges faced by the characters in the pursuit of their goals. This is where you show off your negotiation and management skills. Here is where you tell your investors how you are smartly crafting that option agreement on the building acquisition, how you have managed to negotiate seller financing to minimize the amount of equity needed for the project, or how you managed to secure the property at below market prices from the bank. You could be doing a deal in the historic quarter of a city in Europe where archaeological remains are likely to be found, and your audience will be very interested in learning how you're dealing with that issue. This is where you tell other investors the sorts of things that gets them excited. Investors are not keen to listen to a bunch of facts and charts. People want to be part of cool things, and they will be more willing to jump on board with you if you have an interesting and exciting story to tell. The theme is the main idea underlying the story. This is where you discuss, for example, why you think development is the best approach to investment in the current market. Is it because there is a lack of quality property in the area? Have you detected an unserved niche in the market? Are you buying below replacement cost? Is this a market where people tend to stay for short periods of time and are therefore more interested in service apartments? Have you identified the student housing market as underserved and would well absorb another residence? The strategy should be very clear, and every effort should be aligned towards the accomplishment of the goal. The story should dwell in detail about what means will be put in place to achieve the goal. Make sure your theme resonates with the investor. A conservative investor looking to clip coupons every quarter will not want to hear about a development project. The narrative arc describes the progression by which the events in the plot unfold. In a movie, the action slowly builds up to a climax, normally taking place towards the end of the film. In real estate, the climax takes place as a deal is secured, in the ingenious way in which the plot was identified and the price was agreed upon. If your investors are driven by IRR, the climax will consist of how you line up all the ducks in terms of price, financing, payment schedule, building permits, entitlements, etc. to get the best possible returns. Post-acquisition, investors will want to know that it will be a smooth ride thereafter. Every real estate player loves a good real estate story. Most pitches you will do in your real estate career will be in the form of spoken stories. People will be keen to listen about your ideas, the challenges you overcame, how the deal unfolded, and how you managed to put all the pieces together. With this view in mind, we may proceed to collect the market data we need to put our story together. Real estate deals are complex and have lots of moving parts. Some good storytelling techniques will help you communicate more effectively and help you raise more capital. As always, feel free to contact me at jc@realproperty-investing.com.